These guys have been awesome. We added them on, and you'll see some huge changes here within the next couple of months as far as the accounting and what we're able to do for you guys in the reports and the different revenue sources. Because as I had said earlier, they are nationwide. They work with different management companies across the country. So we're able to brainstorm with them and be able to compare it and have instant data on what other people are doing and how it works and how to implement. So with that, I'm going to turn it over to Mo. He'll go over a little bit kind of the background of what they do, and then some of the reports that we'll be able to start preparing for you guys, as well as, how to request those reports and how that all works. So thanks, Mo.
Great. Derek, thanks for the warm introduction. Hello, everyone. My name is Mohammed Mo Hussein. I'm the principal, one of the founders here at Balanced Asset Solutions and the CEO. A little bit about ourselves. So, as Derek had mentioned, there's a lot of different software programs that are out there in the market. Our team and our firm specifically just focuses on the real estate market and all the different solutions that are available in the market. And we're kind of we're a unique firm in that, we do have CPAs and accountants on staff. We have a very deep bench of knowledge when it comes to accounting, but also even just the operations side and all the different solutions that are out there. And so we are kind of uniquely positioned to be able to offer assistance and guidance and support to clients to help ensure, number one, they're maximizing the value that they're getting in the products that they're licensing. Secondarily, ensuring that their accounting is held to a high standard and ensuring that they are not only GAAP compliant, but also Department of Real Estate compliant. You'd be surprised, a lot of folks in this space, are great property managers and asset managers, but there is kind of a chasm and kind of a gap in kind of the knowledge and the kind of the required skill set to be able to not only do the kind of day-to-day bookkeeping and accounting, but also ensuring that everything is being done kind of correctly, as to not require, extensive kind of cleanup and even just concern, especially if there's ever a scenario where you're being audited. And so a little bit about ourselves. We've been around for, about a little over 5.5 years. We are an international firm. So aside from just the US, we also do have clients overseas and in Australia, India, Dubai, and Canada, and London. And the markets that we kind of serve are across kind of the entire spectrum of what's available today in real estate. We don't only focus on just residential. This is commercial, student housing, manufactured housing, self-storage. The only market we don't touch is senior housing, mainly because of like HIPAA and other like PII information that's usually in the databases associated with managing these tenants. And so and our services kind of expand from just the accounting and bookkeeping, tax services, but also on the marketing side, web development and SEO. As we've been working with Derek, we've been working on just ensuring that all the accounting and everything is accurate within the system, that you owners and investors get the correct and accurate reports and numbers. And today I'll be going over kind of the different reports. So you guys can take a look at why they're important and what you want to see. This is kind of a quick blurb on kind of some of the professional services and implementation conversion services that we offer. And then also on the brand marketing and SEO and web development. So this is an area that we've been actually expanding in, for customers that have, residential properties and you have vacancies and looking to decrease those vacancies and get bodies into those units. There's kind of two approaches you can potentially take. One is to, you can pay for leads and use sites like Zillow and Trulia and apartments.com and whatnot. But a lot of these sites will charge you on a per lead basis. And, they're supplying you with the same leads that the competing property right next door is also getting. And you're not necessarily getting a price break. Another way to approach, kind of decreasing in your vacancies and whatnot is to focus on kind of SEO and the actual on-page optimization for your actual vacancies pages, so that you can ensure that you show up very high, if not the first search result, when somebody in a particular area, for example in Utah where your property is located, is looking for an open unit and things of that sort. So and this is something that we also do very extensively in-house. This is actually the first year where we're actually starting to kind of invest a little bit in marketing. Traditionally, we've always kind of done like SEO, and if you actually look in Google and put in, Yardi Breeze consultant or Appfolio consultant, we show up as either the first or second organic result. So next, what I want to segue into is kind of the reports that are available within Appfolio. So, I personally used to work for Appfolio before starting this firm, and Yardi as well. At the time that I was working at Appfolio was, this probably, some over close to over 10 years ago. And at that time, they only had about 150 employees, were not public. They've significantly grown since then, and the product offering has significantly expanded. There's a lot of different reports that you can see and use, and that can be distributed to owners. And so I'll go over kind of a handful of different reports and what you want to kind of take a look at and kind of the caveats with each of these reports. And so one of the most popular reports that you'll see within Appfolio, and that's a kind of a staple report that property managers like Derek will send out to the owners, is the owner statement. The owner statement is, I would say, is somewhat of a kind of a modified cash flow, if you will. It does a good job of showing kind of the operating cash account and any transactions that are actually showing an either increase in cash or a decrease in cash associated with that operating cash account. Now, some of the challenges that come with the owner statement is that, if security deposits, for example, are being paid out to the owners, or the security deposits are going into the same bank account as the operating funds, it doesn't do a good job of kind of delineating, security deposit types of activity and transactions, usually that you'll see during move-ins and move-outs, and kind of the actual income and expenses on the property. And so and the other thing is that it doesn't give kind of a good snapshot in detail of kind of like how cash has changed over time, and even income and expenses in your net operating income has changed kind of over time. And so this is definitely a great report to get kind of a very high level, quick glance of what's actually happening on the property. But we would argue that, looking at, an actual income statement, and hopefully preferably kind of like a 12-month income statement, would do a better job of showing how your actual income, your property is being operated, and how the transactions and the activities that are occurring on the property are affecting your net operating income. So I do want to make this also kind of dynamic. Derek, I don't know if you wanted me to kind of just talk through the reports, but I'm happy to make this kind of dynamic, and just as I'm kind of going through these, love to give opportunity for the audience to ask any questions, give any feedback, and what have you.
I think just kind of go through, and if they have questions on them, then they can ask questions as they go through. So, because they're familiar with this one, the other one they're probably not as familiar with. So,
got it. Okay, so the balance sheet. This is a very kind of like a staple report within just financial accounting in general. So this report gives you an overview of what's in your actual operating cash, your security deposit cash, what is the actual liabilities, and then of course the equity section. And so we would suggest that if you want to take a look at something like a balance sheet, we have the ability to provide both cash and accrual reporting. The main difference on the balance sheet when you're looking at an accrual balance sheet is that you will see a line item for accounts receivable, you will see a line item for accounts payable. On a cash basis, those accrual line items do not exist. But some of the things that we look for when we're looking at a balance sheet is, negative items. So aside from owner distributions and contra accounts to asset accounts that are logging the depreciation of a particular asset, aside from those two scenarios, there shouldn't really be anything else that's showing up on the actual balance sheet that's showing up as a negative. And so The other thing to kind of keep in mind is, especially when it comes to kind of tax season and you're using your CPA or your accountant that's doing your taxes, they're looking at, the balance sheet or the asset value for the actual properties that you own. There is a depreciation schedule that's kind of put together based on your loan term and whatnot. And then along the way, as there are capital improvements and other improvements that are happening on the property, there are ways to kind of accelerate that depreciation. And even potentially, especially coming into this new year, there's been some changes on like certain aspects of like capital improvements that can be appreciated at an accelerated pace. And these are things that we can definitely go over with you guys. But when we produce like financials for our clients, the goal is that, when Derek produces and puts together the financials and submit and sends it off to the owners and the investors, is that, hopefully this will be a financial packet that you can then take and you can use as your kind of your go-to and your finalized financial packet and reporting. And so, when we take a look at some of these balance sheets and maybe these are things that we're not tracking for you guys today, but there are a whole host of other items that we can have on the balance sheet that will make things easier, especially when it comes to tax season. And this comes down, and some examples would be, the building value, the value of the land, the depreciation schedule, things of that sort. And then also in scenarios where, there's collections on a particular previous tenant, where we're going to be writing off that bad debt, if you will. That can be something that can be a line item that can show up on your balance sheet. But the balance sheet that I'm showing here on the screen is a very kind of like very basic and kind of fundamental balance sheet that's just kind of really, for the most part, I think this particular property didn't have any operating cash and not too much activity under the assets section or even the liability section. But, you want to make sure that your balance sheet captures all your the asset value, depreciation, your loan, which is a liability, and how that's decreasing over time. This is also something that should be keeping accurate track of your owner contributions, investors that have invested into the property, as well as distributions. And all these things are also things that will come up if you ever go through a refinancing of any sort. And so although there are fundamental items today that we're tracking for you all, if you'd like a more robust kind of balance sheet that's tracking the actual asset value, depreciation, the liability associated with the mortgage and whatnot, like these are all things that we would suggest and heavily and suggest kind of incorporated into your balance sheet. Another report that's really good to take a look at is the income statement. Now, we usually suggest looking at, a current income statement, which shows the selected month and the year to month end, and then also another balance sheet or another income statement that would show kind of your 12-month income statement, and that'll show kind of the difference that's happened over time with your actual income. And so, capturing things like the rent, concessions, late fees, your management fees, and to actually track what your operating income is going to be. This also can be used as a mechanism for some level of forecasting. There are two ways that, rent can be captured within a income statement. So one is kind of how we have it displayed here on the screen, where we're just capturing what we're actually charging the tenant and what we're going to be getting in rent income. Another way to track this is to create what's called a gross potential rent. Gross potential rent is essentially, if you were to market the property and actually charge a rent that's actually at the market rate, what that would be. And then, minus any concessions or loss to lease. So, if we have a property here where we're charging $1,200 a month, but the actual market rent is actually $1,500, that'll show us a loss to lease of about $300 or about $290. And then less any vacancies, less any open delinquencies. And this will give you a good idea on the delta between what you're actually charging for rent and what you can actually potentially make off that particular unit. And this also allows for you to be able to have a a checkpoint when you're going to be going through, rent increases or when the property gets vacated, and things of that sort. And so, for the most part, the things that we kind of look for is on these income statements is negative items, of course. So, that you shouldn't have an income account that has an actual negative balance. And then things like prepaid rent. So prepaid rent at the time that it is prepaid is considered a liability, and that's something that should show up on your balance sheet as a liability. And then the month where the actual rent kicks in. So let's say, for example, a tenant made a payment in December for January's rent. In December, that should actually be considered a liability. And in January, when the actual charge shows up, is when it should be actually considered as actual income. There are certain tax advantages that come with how you actually express your actual income in that regard. And this is something we could definitely kind of go over, but kind of a general rule of thumb in terms of just following generally accepted accounting principles. Prepaid rent should be something that should be shown on your balance sheet up until the point that it is actually considered income. So these are some other reports that, usually are supplementary. We would say that probably the fundamental reports, like the kind of baseline of financial reports you should be looking at on a monthly basis, are the balance sheet, the income statement, and the cash flow. Main difference between the income statement and the cash flow is that the cash flow will show any and all transactions that occur with any movement of money going in and out, versus the income statement will only look at items that are either income or expenses. Okay. And so some examples where those would not be the same is, if you have some capital improvement or something happening on the property, and that's a capital expense, that's something that's going to be depreciating the asset. That's a transaction that would show up on your balance sheet versus your income statement. However, since there is cash being paid for those improvements that are being done, that activity would actually show up on the cash flow. Also things like prepaid rent, although prepaid rent wouldn't be considered, an actual income line item. It is something that would be incorporated in the cash flow because the property's cash had increased due to that payment that was made. And so you have those three fundamental reports. You have your balance sheet, income statement, your cash flow, and then you have reports that are supplementary that corroborate the items on those three, staple financial reports. And some of those reports include your H payable, which is all outstanding invoices and payables going out to either vendors or management companies, or even refunds going out to tenants. Another report is your age receivable, and then another great report to take a look at consistently is your rent roll. So your rent roll will show you kind of what the actual market rent is, your square footage, what you're actually charging in rent, what the deposit is, and then the lease from and the lease to date. So you want to always ensure that your tenants are current. If they are not current, this offers an opportunity of either one, incentivize them to actually sign another year agreement, and to give them some favorable pricing for that in return for that commitment. Or if they don't choose to, then to have a more aggressive kind of monthly rate. And this will help you kind of maximize the actual rental income that you're getting on that said property. Main things you want to look for in the rent roll are things like ensuring that there is a secure deposit amount. Any rent and rentable items are covered. Rentable items would be things like parking, if there's a storage unit or something, any other ancillary income or items that are being charged to the tenant aside from rent, and then looking at lease expirations. And then the last report I have here is the actual delinquency and open AR. So this report would capture your AR. This previous report that I showed captures your AP. This is also something that should be reconciled and should match up to a T with your accrual balance sheet under the respective items of accounts receivable and accounts payable. So I think for the most part this is just an age receivable detail. So there's a delinquency report, which just kind of shows the overall balance of a particular account. for a particular tenant. It'll also show things like the last payment amount and, the last payment that the actual tenant has made. And we'll also show like how many times this particular tenant has actually been late. The age receivable detail will show and actually parse out what that actual balance is made up of and when each charge was charged and kind of the delinquent nature of that particular charge, whether it was, 30 days late, 60 days late, 90 days late. All right, so in closing, this kind of gives a very high level overview on kind of the different reports that are available. There are a whole host of other reports we can definitely show, and I know there's going to be a myriad of certain owners or maybe institutional investors and financial professionals maybe that would like to get more detail and maybe some flexible reporting versus just looking at an owner statement. But that's why we're here for. And if there's any questions or anything about any of the details and items that are showing up on your report, our team is kind of overseeing the balance sheet and the bank reconciliations and the overall financial health of Derek and NetGain's customers. So we are here as an extension, as a resource.
Any questions for Mo on any of that? Okay, so one thing that'll happen, so if you because we just have been doing the owner statement. So if you would like the others, let us know and we will be able to start uploading those to the owner portal and emailing those out as we send out the owner proceeds each month. So it'll be pretty easy with just a click of a button. But yeah, we want you guys to be able to have all the financial data that you need on your properties so that you know how healthy that is and how it's working for you. So which is one of the reasons I hired these guys. They've been fantastic. And as you can see, they bring a lot more to the table that'll benefit all of us with their reach. So
definitely. And yeah, as far as those additional reports, we can definitely add them to the packets and the portals. And I can imagine, Derek, you probably get phone calls, especially around this time of year, or come tax season. Hey, can I get my 12-month income statement and other things and whatnot? And so I would suggest kind of like if we can provide these kind of like on a standardized and consistent basis, and that way you guys will have all this information at your fingertips whenever and if needed.
So
I have a question. Do you guys provide just a standardized end of the year that we could provide to our income tax people?
Yeah. Like an individual, like a financial packet specifically for tax purposes.
Yes, I find myself at the end of every year rolling through all of my costs for my rentals, even if it's cable and water and power and everything, and itemizing everything for my tax guy. I didn't know if that's something he always needs, or if you guys automatically provide something for like a 1099 or whatever it is.
Yeah. No, of course. I mean, the reason he's asking for these things is because these are potential write-offs that can be offset against the income the actual property is generating. So. But yes, these are definitely things that and this is something that we do offer, our clients. But yes, if there's a particular packet or like, we also do taxes, but you most certainly don't have to use us. But to get all that information ready, what your CPA or your accountant, whoever's doing your taxes, is going to be looking for is basically kind of itemized detail on every transaction that's occurred, so that they're classified correctly, and then secondarily ensure that they're capturing any potential items that can be written off or used as an offset against the income, including capital improvements.
Thank you. That answers my question.
No problem.
yeah, you'll really be able to start seeing the impact of this partnership here over the next year. We're in the early stages, but there's a lot of things that we'll be able to do and we'll be able to provide for you guys. So on those lines, 1099s, we'll be able to get them all sent out by the end of the month to you guys. So those will be coming out, and then if you have any questions, we'll be able to work through them. And all the end of year statements will be sent out with your owner proceeds, which will be done, starting to be done after the conference today. Since I was out of town, and didn't get started on them yesterday with the weekend. So those will be all sent out today. You'll have the regular statement that I sent, and then the year end statement that we send, so you can have that to your accountant, and we can include, I'll go ahead and include the income statement, year end and that with it. So. Okay. So with that, I think Trevor Carlson is on. So